Well, hello, Mayor and Council members. Today we're going to talk about compliance with significant financial policies that have been adopted by City Council in years past. I believe the last time that Council vetted these policies were in 2016. Today we're going to talk about compliance with our cash and investment management policy, as well as our debt management policy, and our required reserves policy. Those are some of the most significant financial policies that guide how we operate within the city. These policies were created by looking at best practices from a variety of different sources, and again approved by council. And really their purpose is to protect city assets and to ensure the long-term financial viability of the city. And these reports I'm providing to you and to the community help ensure that we are demonstrating accountability and transparency. The primary objectives of our investment management policy is to ensure everything we're doing is legal. That's the most important. Number two, ensure we have liquidity so that we're able to meet our daily cash demands. Number three, that our investments are safe and we're protecting public funds. And number four, yield. It's important that the money that we invest make an adequate rate of return. And so real quickly, I just wanted to say that the city's investments do appropriately meet the requirements of Washington state law and our investment policy, and we're actually still getting a decent rate of return. This next slide shows our cash and investment balances over the last 6 years, including as of the year end 2020. The green line indicates our cash in the bank. The yellow line indicates the local government investment pool balance, which is a governmental investment pool that's very conservative but earns a little bit more than when we just keep the money in the bank. And the gray line is for our investment balances. Those are bonds, municipal bonds, treasuries that we hold in separate investment accounts. You can see that the investment balances over the last 3 years have been fairly stable. It's the green balances that you can see a significant spike in 2020. That green line there represents about $7 or $8 million in cash in the bank. And there's a reason why it's a little high, or it's a little higher than I usually keep our cash in the bank balances. And that's because, number one, we received some large distributions of cash this last year. For example, the tribal contribution for the sewer connection to our wastewater treatment plant. The second reason is that staff have been very conscious of the impact or the potential impact of COVID on our revenues. And with that uncertainty in the air, we really worked hard to control expenses. So there's a reason why our cash balances are higher than they normally are, higher than I normally keep them at the end of 2020. And just an FYI, I'm going to make a decision within the next couple of months whether or not to move that cash over to a different way of a different investment option. Next, we'll talk about how we're doing in compliance with our debt management policies. And again, our debt management policies identify our approach to managing debt. And adherence to this policy is essential to ensure that the city maintains a sound debt position and it protects the credit quality of the institution. Most of the policy describes what is legally acceptable in the state of Washington. And so I'll confirm with you today that we are operating within all of our legal limits. We continue to pay down all of our debt. So our debt as of 12/31/2020 is less than our debt as of last year. We have $9.3 million in general obligation debt, which represents part of the outstanding loan balance or bond balance on our Civic Center. We have $5 million in water and sewer debt. And there's one other thing that isn't represented in our policy, but I did some research at Tom's request, and per the state auditor's office, debt service, especially for your proprietary funds, your utility funds, should not exceed 12% of your revenues. And so that's an additional sort of benchmark, if you will, to examine your debt loads. The debt service load for water was at 5% of revenues, and the debt service load for sewer was at 6%. So we are well within the recommended limitations established by our state auditor's office. This is what we call Schedule 9, or more properly, what the state auditor requires that each city prepare at the end of each year to describe or to show the activity related to the liabilities they have. In the middle column, you'll see we have a beginning balances, then we have additions and deletions, and our ending balance as of 12/31. And you can see our balances are decreasing. Included in that liability is actually compensated absences. So that is required by the state auditor to basically be reported to the state auditor's office. There was a slight increase in those balances, but just so you know why we show you this report, it's one of the reports that the state auditor's office looks to examine our debt activity in the last year. And finally, we're going to talk about compliance with our fund balance and reserves policies. So why in the first place do we have a fund balance and reserves policy in place? Well, I can think of no better example than to look at a history of our monthly revenues from our general fund. You can see very close to the middle of the page, we've got revenues in February of 2017 of about $583,000. And then if you go to the middle of the graph in May of the following year, we see revenues up to $1.4 million in 1 month. That is a $700,000 plus swing in our monthly revenues. And so the reason why we have a fund balance policy in the first place is that so we can respond to these economic and cyclical fluctuations, and also so that we can be prepared for any unexpected liabilities and perhaps even take care or take advantage of economic opportunities. This particular slide shows our fund balance or reserve requirements for our operational funds in a nutshell. There are 3 components to an adequate fund balance. Minimum fund balance reserves, which provide a financial cushion for revenue fluctuations and cyclical activity throughout the year. And as you remember on the previous slide when I showed you the fluctuation in just the general fund on a monthly basis. So this first component helps us ride those waves, if you will, and still have cash reserves to fund our activities. The second component, towards the middle of your page, is the economic uncertainty reserve. This provides a financial cushion against unanticipated adverse financial or economic circumstances. Well, we certainly had that this last spring due to COVID, where we saw our general fund, especially our sales tax revenues, dip significantly for a couple of months. And this is the component that helps us ride those waves. And finally, a future liability reserve. And that's just anything that might pop up that we didn't expect to pay. For example, compensated absences for a retiring employee, or perhaps we're self-insured in some manner, or we don't have insurance coverage for a particular incident, and it's got to come basically out of our checkbook. So that is in essence a picture of your general fund, streets, water, and sewer operational reserve requirements. This is also a document that is in your materials, and you can see on the right-hand side we have the three components. Oh, sorry, down the left-hand side we've got the three components of your reserve policy, and then across the top you've got general fund, streets, water, and sewer. And this is the document that I use to be able to test whether our reserves are adequate. If you go towards the bottom of the page, you'll see where the actual reserves compared to the minimum and maximum reserves required by policy. Well, I hope that that was a helpful explanation of our reserve policies, our investment management policies, and our debt policies. And thank you for your time.